Let's welcome our featured guest of the program. Meanwhile, Jeff Hall is Senior Financial Advisor at Manulife Wealth, and he joins us right now. First of all, Jeff, thank you as always for being here with us.
My pleasure.
You follow geopolitics very closely. You've got lots of qualifications in that regard. You're a member of the NATO Association of Canada, among other things. What's your take, first of all, on the Middle East? Extremely volatile, but where do we sit now after a reasonably restrained Israeli response and a relatively muted rhetorical response from Iranian leadership?
Yeah, hopefully cooler heads will prevail and this won't keep going up the escalation ladder. I was really surprised Israel had actually had the restraint it had after that massive missile barrage. And they only really touched those military sites. They didn't touch civilian, they didn't touch oil infrastructure, whether it be ports, refineries, etc. So that was actually a big surprise because they have that capability to do that. They did deliberately strike some areas around Tehran itself, just to remind the Iranians that they can get through their air defenses without much of a problem. So hopefully cooler heads will prevail. And you did catch on to something there that the Iranians have kind of had a very muted verbal response for that. So hopefully this will kind of simmer it down. But this does take a lot of risk off the table as opposed to that escalation ladder everyone had feared would cause a greater problem for oil.
Is this a rational response by the oil markets? Are oil markets right to take $6 out of the price?
Yeah, I'd say there was a risk premium minimum of $6 there as well. And you got to remember, when you look down kind of the runway for the future with oil, there's a lot of other factors that could play in. For instance, we have the U.S. election coming up. Harris versus Trump. If Trump was to get in, people think that would be much better for oil, but he's already said drill, baby, drill. Well, that means a whole bunch of new supply, yeah. And there's already a slight oversupply in the market. You have China, which has been getting slightly weaker. The oil demand there is not up to snuff. We're out of the big driving season here in North America. So there's all these little factors that kind of layer on that the pressure on oil is just not the same as it was.
You do not often invest in shares of oil and gas companies on behalf of your clients because of the unpredictability of the commodity price. Is that correct?
Yeah, I'd rather have a sure thing. I don't want to have to guess. And honestly, I can't guess 5 days from now for sure what oil will be up or down. Like Iran could do something silly and send another barrage of missiles into Israel as an example. So because we can't really factor that in, I want to be able to see down the runway into the future, far into the future, to be able to help predict what my clients can get as a result. And oil is just one of those commodities you just don't know.
That is Jeff Hall. He's our featured guest. We'll have lots more from Jeff through the course of the show. And at the end of the show, you'll have an opportunity to put a question directly to Jeff Hall. Up next, the question on many investors' minds is what happens in the U.S. election? How will it affect our portfolios? Jeff Hall will be up the next with a list of stocks that he thinks can do well regardless of who wins the White House 8 days from today. Welcome back. Let's take a look at the markets for the first time in this program. We'll return to the U.S. futures, which we did look at briefly. There you can see a pattern of solid advances across the three major contracts. These markets, with the exception of the NASDAQ, were down on Friday. The NASDAQ rose by about half a percentage point. Through the course of last week, it was a negative week for U.S. markets and the TSX here in Canada. The Dow Jones was down by 2.7%. The S&P 500 down by a full percentage point. The NASDAQ rose modestly on the week. The S&P TSX composite fell by a percentage point and a half last week. Here's how major Asian markets concluded the day today. They finished up, as you can see, particularly Tokyo, up by nearly 2%. The gains were much more muted in Hong Kong and in Shanghai. Let's go to Europe, where the markets are actively trading. It's a mixed picture here, with London down by 1/3 of a percentage point, Paris up by 1/10 of a percentage point, the DAX index in Frankfurt, Germany, down by 1/4 of a percentage point. And here is the S&P TSX Composite Index. Didn't have a great week last week. It was down all 5 trading days of last week. And as I said earlier, finished the week down 1.5% from where it began. Still, however, the TSX has been on a tear in the second half of this year, and that number of 24,463, not too far from a record high. Well, let's bring back Jeff Hull. He's our featured guest. Investors around the world, including right here in Canada, are looking at the U.S. elections, wondering who will win. It looks like a coin flip. The polls consistently come in at about 50-50, or numbers that are otherwise within the margin of error. How could it affect our portfolios? Are there stocks out there that would benefit from a Trump win or a Harris win? Let's put that question to Jeff Hull. Jeff, you, like many others in the markets, would prefer some type of hung result here, some kind of split Congress, or a split between Congress and the party that wins Congress and the party that wins the White House.
Yeah, it's actually good. When you have those 3 branches of government in the U.S., I always say gridlock is good. We'd almost prefer that one party doesn't control all 3 branches of government, have all 3 hands on the steering wheel. Because if they do make a bad decision, it drives everybody off the cliff. So we may get a situation where we, again, have gridlock, which is good. But the most important thing is we're just over a week away, and then the fog clears, and we know who the person is going to be president. Therefore, we know their policies for the next 4 years. And that's a great opportunity to have that fog clear and be able to see down the runway to see what's coming. Much easier for that.
So what are some of the sectors that might benefit from a win either way? Let's talk about the presidential nominees.
Well, first of all, one thing I do always say, it's always good to buy companies that are like Switzerland. They're kind of up the middle. So it doesn't matter what party's in power, whether it's Harris, Trump, or Ronald McDonald. If you have a company like an Apple or something, people still use their iPhones no matter who wins, et cetera. But there are certain companies you could lean into left or right depending on the result. For instance, Harris is big on the Green New Deal, green energy with EV charging and solar and wind as an example. But there's a parade of companies under Trump that already are doing well under the Biden-Harris administration that could get a bit of a turbo boost if Trump was to get in. And I'll give you one quick example. Axon Enterprises, that makes the police body cameras and taser guns. Obviously, he's going to have to chase down a lot of people. He says he's going to deport, and a lot of those ICE agents will need things like body cameras potentially as well. So it could give an extra boost to a company that's already doing super well and could have that extra added sales of their products and services.
And perhaps we could take a look at that in terms of a hot graph, ticker symbol AXON. And what exchange is that on, Jeff? Is that New York or
that's NASDAQ?
So that would be AXON on the NASDAQ. And the business of that company is body-worn cameras for police officers?
There's a bit of a secret, though. So the body cameras are great. Obviously, the taser guns help non-lethal force for police, but the real secret sauce to that company is something called evidence.com. So when police officers get off their shift, they take off their body camera, they click it into a docking station, and 12 hours of their footage is encrypted to the cloud for purposes of court, etc. And that's thousands and thousands of dollars a year that's paid to Axon to encrypt and store that data on behalf of the police force as well as courts. It can't be altered, and it keeps things true and on track.
We can't show that stock, unfortunately. The stock has more than doubled, however, over the past year, from about $200 a share to $444 per share right now, and is currently trading at a price-earnings multiple of 92 times. What do you think? Does it typically get valued on a PE multiple, this stock?
Yeah, it's a bit of an odd company that way, because sometimes it has great earnings and the stock doesn't move, and then there's no news and the stock takes off. So because it's a smaller company, it's not the giants, like the big tech giants this week that are going to be reporting, like the Apples, the Amazons. Because it's kind of that mid-sized company, it's kind of off the radar for most people. But the PE is kind of in line with where it usually is, but a company under huge growth, and it's pretty much a monopoly. There's no other real competitors. They have the rights and the patents on all the taser guns, the body cameras, and it took them decades to get into all the different sheriff offices, police offices, as well as municipalities, to be able to get into the SKUs of all their procurement systems that way. So a competitor even trying to start today would take years to try to get into all of that as well.
That's Axon, ticker symbol AXON on the NASDAQ. Another company that you think could benefit is, and I have not heard of this company before, Fair Isaac. It has to do with credit scores, and its ticker symbol, there it is, FICO, as in the FICO score. That stock up 142% over the past year.
Yeah, Fair Isaac's an interesting company. It's 68 years old, and it's basically the monopoly of credit scores across the world, but mainly in the United States. And as an example, it's already doing great under Harris and Biden, as it's done under all prior presidents, because every time someone wants to get a credit card change in their limit, or a new credit card, a car loan, a mortgage, they have to have their credit score checked. So that's where FICO comes in and provides that credit score on behalf of citizens, as an example, in the United States. But one of the real benefits it has, if Trump was to get in, is Trump's already stated that he's planning to make car and truck loans tax deductible. So if 361 million Americans suddenly decide, hey, we might be more interested in buying a car in the next 6 months, you add on all the flooding that recently happened due to the hurricanes in Florida and the Carolinas, suddenly there's a lot of credit scores, a surge of them suddenly being ordered, and that's a lot of free money for that company. And one of the blessings of that company, or interesting things, is imagine if we ran a restaurant and all the food that we needed, we get for free, then we cook it and then we sell it. They get all the data from the credit scores from the banks and people and institutions for free, and then they resell it to the financial institutions. So their input costs them nothing, and their output is what makes them the money. So it's an interesting company. It's quiet, it's below the radar, but provides an essential service, and essentially is pretty much a monopoly.